Hello and welcome to Livewire's 2022 Outlook series. I'm Ali Selby and today we'll be sitting down with some of Melbourne's top fundies to ask them which areas of the market are overheated and why.
I think I'd say the retail trade. I think there's a lot of support at the moment for retail stocks on the back of the Covert lockdown. A lot of people bored at home, free money dollied out to them by the government, and they spent that money online with these retailers. We'll see how earnings normalise for these companies. So for us, there's not really enough return given the risks. We're not being paid to take that risk where the share prices of those retailers are trading at the moment.
I think it's really the concept stocks you need to avoid in 2022. So through the last couple of years, we've had a lot of stocks come to market. A lot of them are great ideas or great products, and we want to be a bit more patient and see whether we can get them at the right valuation. And that's just a trend we've noticed in the last couple of years, and it's a trend that we're not going to buy into in 2022.
Are there any companies that come to mind to really illustrate that?
Yeah, I think the electric car market in particular is Rivian is a great product. We like the car as well. The grille's really exciting. It's probably not worth $100 billion plus at the moment, yeah. Quite frankly, and Lucid's the same. And so, we get it. The social trading revolution or the retail revolution, these people find great products, and I think that's fantastic, and that's what they should be doing. They now just need to find a great product with some fundamental analysis, and you'll get a great investment, and that's the opportunity we're looking for, but that's not what we're going to be chasing in 2022.
I think the crowded trade we're avoiding at the moment is the consumer discretionary space, where the margins are expected to be much higher on the other side of COVID. So you've got risk in both valuation and margins or profits. So I think that's a big crowded trade, and it seems to be more prevalent in the consumer discretionary space than anywhere else in the market at the moment.
Key crowded trade that we're avoiding in 2022 is the consumer discretionary sector. Within the consumer discretionary sector, I'm referencing both the discretionary retailers and also the auto companies. There's no doubt if you look at the short term, there's a positive outlook with the current higher savings rates. But as you look out longer term over the next 3 years, the current earnings levels are completely unsustainable.
So that reopening trade is kind of done?
Correct, or it's very late stage.
So we think US tech is particularly crowded and quite a vulnerable space because it's trading at very high valuations, pricing in continued high growth alongside very low interest rates, which we think is a very challenged and difficult pathway to navigate into the next year.
When you say US tech, do you mean Apple, Microsoft, kind of those bigger names, or are you talking about kind of the smaller mid-cap stocks?
Yeah, well, predominantly I'm talking about the larger, bigger names that dominate the index and dominate the NASDAQ, and those would be the Amazons, Apples, Microsofts, and so on. Certainly that risk and challenge does permeate all the way down though.
I think for me, Ali, it's the COVID reopening, COVID shutdown trade. I feel that it's been tried and probably failed at so many times over the last couple of years. It's really unpredictable. Everyone's trying to do it, and so you've got to try and guess what everyone else is thinking, and it's one I just think I need to avoid.
I think the scariest part of the market for us is definitely those profitless growth stocks. Anything that is selling a dream, concept stock, would be the part of the market we're probably avoiding the most. We think that people are inventing new ways to value companies because they can't find any cash or earnings to justify those share prices.
Market and stuff like
Absolutely,
that.
price to sales in 10 years' time and
Yeah.
that sort of stuff. So we just think, stick with the basics, cash and earnings, and if they have to convince you of what life will be like in 10 years' time, it's probably a bit too dangerous for us.
Crowded trade, I think, is large cap tech. I think there's a big valuation bubble up there. We're a little bit cautious with rising interest rates, rising inflation. We love things that have got pricing power. A lot of the techs have, but the guys that don't make money, I think, could be in for a bit of volatility coming into the new year.